So are we turning into a bullish market soon, right, for the US and even in the Singapore market? Hey guys, Joey here, top tier Myzel, trader in Phillips Securities. And in this video, we'll be doing a recap of the markets, right? We'll look at the major indices like the Dow Jones, the S&P 500, the Nasdaq, and even for the Singapore market, the Straits Times Index, right? Where are we right now for each of these indexes, right? And also, what has played out over the past few weeks, right? So just in a nutshell, right, what happens is that we have seen some weakness over the past 1-2 months due to talks by the Federal Reserve that they could potentially hike rates by about 1 or 2 more times, all right, after pausing, right, finally for the 10th time of hiking rate, they finally pause it, and they talk about raising it by another 1 or 2 more times, right, to curb inflation. However, right, over the past 1-2 days, there was some news that came out, and it seems like inflationary pressures have dipped even more. So this is kind of like the inflationary data chart. You can see that in 2022, we peaked last year in June at 9.1% in terms of the inflationary rate, right? So it kind of like dipped from 9.1, 8.5, 8, 7, 6, and this year, this was in January 2023, you can see it started from 6.4, 6, 5, 4, and just a few days back, it reported that inflation rate has kind of dipped from 4% to 3%. So it's very, very near the Federal Reserve target rate of about 2%, and that's where the market started to react positively, right? So it seems like more rate hikes might not be needed. It might just be not 2, but maybe just 1 more time, maybe this month or next few months. All right, and that's where the market started to run it because inflationary pressures is slowly tapering off, right? And that's the whole purpose of this rate hike since last year. All right, so how does the market look, right, in terms of the Dow Jones, the S&P 500, the Nasdaq, and even the STI? How are we looking as we end 2023? Are we looking at a bullish year end? Could we start to push higher? What are some of the key levels to watch out for? Watch this video all the way to the end. I will share with you each of their specific charts. Let's go. Alright, so this is Dow Jones trading about 34,347. So I've covered the indices about 2 months back, and we were pretty much just consolidating for the Dow Jones, and it seems like that is still the case, right? We are still pretty much below this very firm resistance level that I talk about, and that would be none other than the 34,500. You can see that we have been touching this level or even nearing it, and then sellers came back for the entire market, and we sold off 5 to 6 times. We have approached it and came back down, and that would be the 34,500 level since last year November. So about 8 to 9 months, we're still below it. I think that is a very key level to watch, 34,500. If we can break this level, I would say that's where the Dow Jones, in terms of the entire indices, can really start to push higher towards the next higher target at about that 37,000 level right over here. That is pretty much back to where we were at the end of 2021 before the entire tech sector sell off, the market sold off due to all this interest rate high and inflationary news that came out, right? Okay, so this is where we are, right? We are at about 34,347. You can see that we are nearing, all right, we are nearing the 34,500, and it seems like some selling is coming back. Right. What about the trend? Right? What about the trend? Are there any signs of it, turning up? Well, I think I mentioned in the previous video as well, there are indeed signs of the trend starting to turn up, though it hasn't really firmed up very firmly, strongly up in a upwards direction, but at least there's some signs of the uptrend just starting to happen. Why do I say that? Well, you can see that right over here, all right, in terms of the longer term moving averages, the 100 days moving average line, right up here, we have crossed above at the beginning of the year. All right, you can see since last year, right, it was a downtrend. We just went lower and lower. We got lower lows and lower, so until we found a bottom here at the probably in October last year, we found a bottom. And since then, right, after October last year, we have formed what we call higher lows, right? That means as it moves forward, the low gets higher. It doesn't really sell back down to where we were or even lower. It just comes down a little bit, and buyers comes out for the entire market, and it starts to rebound back up. So there's a sign of strength. That's a sign of strength. Of course, the moving averages are turning up as well. We got this crossover here in terms of the red line, 100 days moving average, going above the 200 days moving average, and it is still above one another. So the mid to long-term trend looks good. It looks like we are slowly turning into an uptrend. However, we need to, as I say, break this 34,500 level. Once we break this level, I can say that the momentum will be much faster. The market can really start to push up for the Dow Jones higher quicker. All right, but there are already signs of the uptrend forming, all right, just by looking at the moving averages, and also, as I mentioned, higher low. So this was the low, the bottom in October last year. This is another low, and over the past 2 months, this is another low as well. So you can see the lows get higher and it gets higher, and we are consolidating at a higher support each time. So that's a good sign of the market, right? So yeah, let's see if you can break the 34,500. If you can, I think the market will really start to see more strength. Next one, the S&P 500 that makes up the top 500 companies in the US, and it looks really good as well. For those of you who are expecting it to come back down, back to where we were last year, the bottom, October, November, I would say we have already passed that stage, right? The worst is more or less over. I mentioned that there could be a potential bottom since last year, all right, and since then we have continued to push higher. So same thing, we have found what we call higher lows, higher lows, higher lows. So it seems like as we are moving forward, we are consolidating at a higher level. These are all signs of strength, signs of the uptrend forming. And in fact, it has already formed, not just like last month or last week, but since the beginning of the year, February, March, we have already turned into what we call an uptrend. Just by looking at the moving averages as well. Look at the red line, the 100 days moving average line right here. You can see 100 days moving average red line cross above the blue line as well, right? Obviously, both the red and blue line, they are both pointing up right now. So mid to long-term trend, it is positive as well, right? Compared to last year when it crossed down, it was a bit of a downtrend. It has already turned into an uptrend for the S&P 500. And the key is this, right? In an uptrend, we can still be consolidating below a very key resistance. It comes down, and it couldn't really break above that resistance. But for the S&P 500, you can see that just last month, right, somewhere in June, early June, as we turn into an uptrend, we also broke the resistance level right here. That would be the 4,300 level, whereby we have been below since April 2022. So like more than a year, we are below. Finally, we broke up above it, and the entire indices is still trading above that 4,003. So it looks pretty good. Upside targets can be all the way up to that 4,600 level. That is pretty much the next resistance level for the entire market. So it looks quite good. And in fact, I think we are starting to push up over the past few days, right? With this good news on inflationary pressures cooling off further. All right, so that's a good thing. And also in terms of the short term, look at this, right? The green line is what we call the 20 days moving average. It was flattening out right here as we were trading below 4,002, right? But look at this, right? As we broke 4,002 and even 4,003, this green line started to slope up aggressively. Right now, it is still sloping up. So it looks like a pretty good uptrend as well, right? So I think the market for, the S&P 500 indices, it looks good, all right? We are potentially starting to push higher. I think it could be a good run for the rest of 2023, all right, as long as we stay above certain support like the 4,300 right now. So let's take a look quickly at this one GT, one good trend system that I have, right? And let's put the S&P 500 index as well inside and see what it says. So this is a system that I have that alerts us on certain stocks and guides us on entry and exit as well. And also it does track the index as well, right? So you can see that since last year, right, for the S&P 500 index, it was pretty much a red bar. You can see at the bottom it's like a trend bar. So red in color, we had a couple of red arrows down. These are all bearish signals that it shows sells down, went down, all right? But somewhere around like the beginning of the year, you can see the red bar started to turn into pockets of green color. So it's starting to slowly turn into an uptrend since end of last year, beginning of the year, and that was where we had some new green arrows pointing up, right? So green arrows are what we call bullish signal. You can see started to appear somewhere in March, somewhere around like November last year, we got this bullish signal, right? Started to push up a little bit, right? And the most recent one was around 5th of May 2023, all right? And since then, we have started to slowly inch up for the S&P 500 index to where we are right now. And obviously, you can see that the bar has turned to a solid green color. So I would say, as I mentioned, the uptrend looks intact. As long as you stay above like 4,003, there are still no exits yet for this green bullish signal. So it still looks good. We'll see whether an exit comes out maybe somewhere at the resistance, and it can also guide us to lock in some profit for the entire market as well, especially if you're trading like the ETF for this index. Okay, so this is the tech-heavy Nasdaq Composite, which makes up of mostly the tech companies, right? And you can see since last year, after we had all the rate hikes, we have sold off pretty badly from like 16,000 all the way to about 10,000 plus, and yet since reversed, right? We have started to see a bit of reversal since the beginning of 2023, right? So you can see the trend has come like turn as well. It is reversing back up. Yes, reversed up since about 3-4 months ago, and right now it is still in the progress of reversing higher. So why do I say that? Well, look at the moving averages as well. Same thing like the S&P 500, right? We have seen a crossover in terms of the longer term moving average, right? The 100 days moving average has crossed back above the 200 days moving average, right? It was all the while down since last year, March. You can see it was a downtrend, but just about 2 months back, we have crossed up. So that is a sign of strength as well in terms of the moving averages starting to turn up. And also, same thing, we formed higher lows, right? So this was the low around that 10,000 to 10,500 level, the bottom we have found since October last year, like the S&P 500 as well. All right, and this low has gone higher to about 11,200. It went higher to currently about 13,000 to 13,200. So that is the low, which is going higher as well as we are moving along the way. All right, so looking at the support right now, you can see that this is the support, 13,200. Why? Look at this. This is the resistance level we have been trading below, right, since last year, April. So for more than a year, we have been trading below that 13,200, 13,000 even if you want to call it, but we have broke this two level, and right now it's about 13,900. So definitely some signs of strength right over here, all the way up to the next resistance, maybe about that 14,500 level right over here. You can see that is pretty much the next resistance level right over here. You can see we touched about 2-3 times, and we sold off at the beginning of last year. All right, so that would be about a 14,500 level for the Nasdaq. So it looks quite good, right? We are in the midst of a reversal right now. It is still happening. As long as we stay above the 13,200 level, I think the uptrend looks very intact for the Nasdaq, for the entire market. We can gradually push higher, and it looks like a really good ending for the end of 2023. Okay, let's take a look at Singapore's STI, trading at about 3,243. So you can see it looks a little bit different from like the Nasdaq, the S&P 500, which has sold off heavily since last year. We found a bottom, and now we are making our way back up. But for the STI, we have not really sold off that much. I mean, since last year, there were not really a lot of tech stocks. So it didn't really sold off that much. We sold off to some of those key support levels like the 3,000 level, 3,100. You can see right over here, we touched a couple of times, and we rebounded from this level. In fact, just about last week, we neared this support level again, the 3,001, and we are making our way back up right now. So we are in what we call a bit of a consolidation phase for the STI, with some pockets of strength. Different sectors are starting to move up, and we are focusing on some stocks like the oil and gas stocks, but not every stock is good, or you want to be more picky in the Singapore market, but there are definitely opportunities as well, right? So you're going to find a bit more like the whole entire strategy and all that. You can attend one of the free webinars. I'll probably place the link below. Attend this webinar to find out a bit more on the entire strategy, all right, and how we have a system to guide us on entry and exit as well. All right, so let's get back to the STI. You can see that we have neared the 3,100 level, started to see a bit of rebound. And where can selling potentially come back again? Well, I think that would be this level, which I've drawn right over here, around that 3,320. Look at this right here, 3,320. You can see a couple of touches since last year. All right, and that's where sellers actually came back, and we sold off, right? So 3,320, somewhere around there. I think that is where some selling pressure can come back again. Now it's like 3,243, so we might be hitting our way back up. And just take note, that's where selling can potentially come back again, right? So STI is more or less in what we call a consolidation phase, unless we break above certain resistance like the 3,320 and even the 3,400 450 level right here. I think these are all very, very key resistance. 3450. If you can break that level, great. I think that is where the STI, the entire market for the Singapore market, will look really bullish. All right, we can start to push higher, right, and the uptrend can finally take shape, right, and as we get out of this, sideways consolidation phase since like 2 years back. All right, guys, so I've done a quick analysis of the 4 markets: the Dow Jones, the S&P 500, the Nasdaq, and even the STI. So I hope that you have a clearer picture of where we are right now, and potentially if we can actually turn more bullish as we end 2023. As I mentioned, right, in terms of the US market, there are already signs of strength. We have already bottomed out last year. We are moving forward really bullishly. It seems like the uptrend is becoming firmer and firmer. We could really turn to be more bullish, especially if inflation continue to come down, right? To come down and we hit the Federal Reserve 2% target, which eventually will be the case, all right, if they hike 1 or 2 more times. But right now, because it has already came down from like 4% to 3% from the month before, right, people are already thinking that the Fed might want to cut down on the 1 or 2 more rate hikes that the Fed has mentioned, right? So that is a good thing. And of course, by the end of the year or maybe into next year, right, if inflation were to cool off and there are any talks about not about hiking anymore but about cutting rates, I can tell you that is where the market can really turn more bullish, right? Because that would set off like a new wave of buying coming back as people potentially expect more rate cuts to happen. So just take note of that. So if you like this video, guys, go ahead and give me a like and smash the subscribe button as well. That will really help out the channel, and thank you so much for doing this. And if you want to find out a little bit more on the entire strategy, so right now we are just pretty much diving into the charts directly, but if you want to find out a bit more on the strategy, the system that I have that pulls out stocks or even the markets, the indices as well, and guides us on entry and exit with like bullish and even bearish signals, you can attend one of those free webinars. I'll probably put the link below this video. Just click on the link, attend one of these free webinars called the One Good Trend Workshop, and I'll share with you a bit more on the entire strategy. Right, so Joey here, thank you so much for watching. I'll see you soon. Take care.